Perfect. So, hello and welcome to today's Finimize community event. My name is Arunima and I'm the community host based in France. I'm excited to be leading this conversation with you all today. A recent report by Morgan Stanley talked about how the space industry will become a $1 trillion economy by 2040. And this really beckons the question then, how do we invest in this industry? Before diving into the discussion, let's first understand the two types of space companies at hand. We have legacy enterprises such as Boeing and Lockheed Martin, which are in multiple sectors, whether it's commercial aircraft or defense and space, of course. Then there are new space companies such as Virgin Galactic that are in sectors like rocket launches, space resources, tourism. So today we'll review investment opportunities in the industry in both these types of companies, of course, from a long-term standpoint. To speak on this exciting topic, we're fortunate to host Dylan Taylor, Chairman and CEO of Voyager Space Holdings. Dylan is an active pioneer in the space exploration industry. He's earned the Space Angel title, having been the 606th human to go to space as part of Blue Origin's NS-19 mission. Needless to say, I'm sure he has a lot of valuable insights to share with us today. For all the attendees, this is a 15-minute conversation followed by 15 minutes of audience Q&A. So don't forget to ask your questions in the Q&A box below. And also don't forget to vote on your favorite questions. So now that the introduction's out of the way, I'll pass the mic to Dylan, who will kick us off by bringing our audience up to speed with how to invest in space. So Dylan, let's start with exploring what's available in the market for investing, both in legacy space enterprises and new space companies. Over to you.
Yes, terrific. Well, thank you for the kind introduction. Great to be here. Yes, the good news is there are more opportunities today than there have ever been to invest in space. So we're slowly unlocking opportunities in the public markets. At the very large side, you mentioned earlier, you have the so-called primes, and that would be Lockheed Martin, Boeing, Northrop Grumman, and Airbus. And those are companies that have space divisions that are pretty much capable of doing just about any project in space. Well-run companies, very large. The disadvantage of those opportunities is, as you mentioned, they're not pure play space companies, right? So you're getting a sliver of space exposure, but you're getting exposure to a lot of other businesses that are really more defense related. Within the pure play space arena, you had some traditional companies like Maxar, based in the US, and other MDA would be another one based in Canada that have been publicly traded for a while. Those are good opportunities as well, but they're not seen necessarily as high growth new space companies. Within the new space arena, we have several newly minted public companies. I'll just mention a few, and we can dive deeper into a handful. But of course, you have everything from Virgin Galactic, which of course is Richard Branson's space tourism company, to competitors to SpaceX on the launch side, like Rocket Lab. Astra is another launch provider. And then on the hardware or satellite side, you have companies like Planet Lab, Black Sky, Spire, Terran Orbital. Those are all kind of newly minted public companies. And then just maybe one last point, there is a publicly traded fund based actually in London called Seraphim that is also doing quite a bit of space investment and has exposure to space companies as well.
Wonderful. I think you very clearly outlined the various segments within this space. So we have, just to sort of do a quick recap, we have non-pure play companies like Lockheed Martin, Airbus, which are well run, but of course they're not 100% focused on space. Then we have pure play companies. Next, we talked about new space companies, which are into rocket launches and hardware. And then, of course, a very interesting point about a publicly traded fund, which is becoming increasingly popular. Also, I think space ETFs are gaining momentum as well. So I think that is also something which investors can actively look at. So for a retail investor, though, what are some of the investment asset classes that one can look forward to in this space?
Yeah, so generally speaking, the easiest ones to understand perhaps are launch, right? That's getting mass to orbit on a rocket. The most famous company in that category is of course SpaceX, which is a private company. And then next you have what I would call, generally speaking, satellites. And again, there's a wide range there. The best thing to understand with space is there are two, generally speaking, two areas of space that satellites occupy. One is what's called low Earth orbit, which is where all the interesting things are happening today. That's roughly 200 miles above the Earth. And then you have what's called geosynchronous orbit. That's 20,000 miles above the Earth. And that's where you have the large communication satellites that run your cell phone and communication networks like that, the GPS constellation, for example. But within the satellite category, you can further subdivide that into, is it providing communication? So in other words, are we sending internet signals to and from the Earth, or are we collecting data? So right now we have a conflict in Eastern Europe, as everyone's aware. A lot of those images coming out of that conflict and a lot of the images going to the Ukrainian military in particular are coming from private companies. Planet Lab, which is capturing a lot of the optical images, but other companies that are capturing images using things like SAR, which is called synthetic aperture radar, which allows you to look under clouds, or infrared or other types of signals that allow you to understand what's going on. So those are some of the satellite categories. And then I mentioned earlier, Virgin Galactic, which I think is really more of a space travel company. That's increasingly becoming a thing. You mentioned my space flight back in December. And then you have other companies that are really more integrators. So there's an interesting company publicly traded in the US called Redwire. And essentially they've acquired other businesses, put them together, and they're doing infrastructure projects. And that's really the next opportunity in space is getting some of these larger infrastructure projects done, private space stations built, getting the so-called railroad tracks laid in space that allows us to go farther or deeper into space or stay longer. So generally speaking, those are the categories.
Okay, wow, that's really a broad spectrum. We have companies primarily dealing with launch, mass to orbit, satellites. Again, within satellites, there seems to be a lot of branches, whether it's communication, internet signals, data collection, space travel, of course, highly popularized by the billionaire space race that's been happening. And finally, the integrators that you touched upon. But, Dylan, there's been a lot of skepticism about new space companies as well, especially on their path to profitability. Because there's been a lot of uncertainty achieve profitability given their pure play business model. So what should retail investors be really cautious about when they're dabbling with investments in this field?
Right. It's a great question. I mean, obviously the obvious ones, right? Make sure that the team is solid. Make sure that they have run public companies before, or they have people on their team that run public companies, because there's a big difference between being a high flying new space company and being a publicly traded company. So that's really important. I think it's really important to have a long-term view. A lot of these companies aren't going to be profitable for a period of time, but once they're profitable, they could be massively profitable. So if you're looking to trade in and out of stocks, day trade or hold for a few months, I wouldn't recommend that. So definitely have a long-term view. And then I think the key metrics to follow in my mind is, what is their pipeline, the so-called contracted revenue? Because a lot of these space projects are multi-year projects. So oftentimes you'll see a company that has very little revenue, but they might have $400, $500, $600 million of contracted backlog. That's a very good sign. And then try to understand what kind of pricing power they have, or pricing flexibility. famously within aerospace and defense, you have contracts that are cost plus, which means whatever your cost is, you get a margin on top of it. And then you have other contracts that are so-called fixed price. And obviously we're in a very inflationary environment right now. So if you have a fixed price contract and you're beholden to deliver a particular service at a particular price, that's a very big challenge because your inputs, the cost of your inputs are going up, but your ultimate payoff with your customer is not necessarily going up as high. So I think that's really important to understand. And then do they have enough cash, right? That's an obvious one, but a lot of these companies are very cash intensive, very capital intensive. And if they have to go back and raise additional capital, that's fine, but then you're going to suffer dilution. So I would be careful of that as well.
Understood. So making sure the team is solid, looking at investments from a long-term horizon and not specifically for day trade. And I think looking at their contractual pipeline and pricing flexibility, cash, the cash that they have at hand, that those are some important factors. I'm conscious of time. I think we have time for one last question. So to all the attendees, now is the time to put in questions in the chat box so that we can toss them to Dylan in exactly like 3 minutes. So finally, what are some of the resources, top 3 resources that can help our audience to do their homework in this field?
Sure. Well, I think everyone might be aware of the Morgan Stanley reports, which are good. There are a couple of lesser known ones that I would recommend. There's a company based in Washington, D.C. called Bryce, BRYCE, a consulting firm. A lot of their research is on private companies, but also public companies. And their reports are widely read within the industry. It's sort of an insider's look. So I would recommend Bryce. There's another company also based in the US called Quilty. That's spelled Quilty. And Chris Quilty, the founder, is a former investment banker. And he's writing primarily on the satellite industry and primarily, if not exclusively, on publicly traded companies. So I like their research a lot as well. So I would say Bryce, Morgan Stanley, Goldman Sachs, and Quilty. Those would be the sources I would recommend as a go-to.
Understood. Bryce, Quilty, Morgan Stanley, and Goldman Sachs. Perfect. So now we'll quickly segue into the Q&A part of the discussion. So we have Sasha, who is asking, what are the leading use cases for space data? Is there any second order effects worth paying attention to?
Yeah, that's a really smart question. So a lot of the use cases have to do with what I would call predictive analytics. So bear with me for a second, but if you think about a database, right, Google being an example, Google has built $1 trillion database by organizing known terrestrial information, right? If you want to know if a shop's open or, what it's rated on Yelp, all that kind of stuff, it's there. It's not going to tell you what to do, though. It's not going to anticipate things in the future. But if you imagine a data set that's hyperspectral, meaning it has lots of different layers to it, and the data can be mined using AI and other advanced predictive technologies, then you can anticipate what you might want to do in the future. So a classic example from space would be, let's say you're a shipper and you're sending something from Singapore to London or the UK, and it's on a large cargo ship. Well, because you have perfect information about the global supply chain, an AI might alert you, look, your ship is actually not going to go through the Panama Canal as planned. It's actually going to get stuck there because there's not enough capacity to go through the Panama Canal. We're aware of everything that's in transit, and therefore you should reroute right now. Things like that. That might save you a couple of days of travel time. It might save you millions of dollars. And the only reason you knew that is because you had perfect information about the supply chain. Climate data, measuring, methane emissions by polluters, on and on and on and on. So think of it as almost like a perfect, I use this term hyperspectral. All it really means is you have different data stacks. You might have an optical stack. You might have a infrared stack. and you build those layers on top of each other. You take all that data, you put it in a cloud like AWS or IBM Watson, and you're able to anticipate things in the future. So just one final point, people say, well, what's that worth? If Google's database is worth $1 trillion, what is the space database worth? And I just look at it this way. We have about a $70 trillion global economy, round numbers. Can we make the global economy 2 or 3% more efficient by having perfect information about what's transpiring on a real-time basis? I think the obvious answer is yes. And at 2 or 3% efficiency on 70 trillion is, $2 or $3 trillion, right? Round numbers. So the point is there's massive, massive value creation potential. And so really the use cases are almost unlimited once you have that data set and once you have the ability to process that information. And then just final point, I mentioned earlier the internet constellations. So Starlink is being built by SpaceX. That's likely to be spun out into a public company. Amazon is building Kuiper. OneWeb is a constellation based, capitalized by a UK investor. Those constellations will be extremely valuable in the future because you will have ubiquitous high-speed internet anywhere in the world, which is obviously going to be a game changer.
Those numbers are simply mind-boggling. You talked about $2 to $3 trillion of market potential. It just it's staggering. And also, in a past interview, you've often talked about the power of data analytics in this field, and it's an up and coming opportunity. So I think definitely a lot of use cases. Meenakshi is asking, there are so many space projects which go on by companies, and private companies are also increasingly looking at this field to enter. So how much more involvement can we visualize from private companies in future? And this is a two-part question. Her second question is, how do we invest in such private companies?
Yeah, well, most of the interesting activity is actually happening on the private side right now, but those private companies are likely to be public soon. Yeah, it's a very good question. I don't know what jurisdiction you might be in if you're in the UK or elsewhere. It really depends on where you live, because a lot of the private companies require some notion of accredited investor. I know in the US and Canada, that's the case. So it depends a little bit on your situation, but assuming you're allowed to invest in private companies in the jurisdiction you live, there are different ways to do that, either as a so-called angel investor. There are other privately traded funds. I mentioned Seraphim earlier, which is publicly traded. There are other space funds that you invest in the fund, they invest in the companies. I have a couple of blog articles that are on my website where I outline, I think 6 different funds, and I sort of talk about each one, the pros and cons. You're welcome to read that. But yeah, the short answer is it really depends on where you live and what the jurisdiction allows you to do. SpaceX, every time they raise capital, they're fully subscribed, right? It's very difficult to get into a deal like that. The minimums are very, very high. Typically for SpaceX, it's like a $5 million minimum. So it's not the easiest thing to do, unfortunately.
Right. And a follow-up to this question is also one of the most upvoted ones, which is, like you talked about the resources to tap into to know more about the sector, but specifically for ETFs, anything off the top of your head about finding more information about investment in these companies?
Yeah. So I mentioned a few of the sources earlier. I also did write an article on additional information resources that's somewhere on my site. I'm happy to send it around if people can't find it. But yeah, I think, what I would do, there's tons of podcasts out there. Finimize obviously is a great resource, but I would just dive into industry related podcasts, because you'll start hearing the same companies, you'll start hearing the same projects. And I think that's going to allow you to determine who's real and who's not. Unfortunately, like with every successful industry, you have people now coming out of the woodwork, so to speak, that aren't particularly credible. And because a lot of these projects are very technical, you have to be really, really careful to not, invest in companies that, aren't necessarily on the right track. So I would just be very, very cautious, especially in the private company arena, because their disclosure requirements are much lower, obviously. But yeah, I would dive into a lot of the industry podcasts. I've done several, again, happy to send those links around, but I think it's more of an immersion technique. And, my recommendation would be learn as much as you can before you make your first investment, just so you're not acting hastily.
Those are some extremely wise words. And the next question is surely going to bring a smile to your face. We have Shantanu asking, how is space?
Oh, amazing. Yeah. Life-changing, I would say. I've been thinking about space my whole life, wanting to go my whole life. And I had very high expectations going in, and it completely just smashed them. It was 1,000 times better than I had even imagined it would be. So yeah, amazing. It's all been said before, but seeing the Earth from space is just something that you can't explain. It's really a profound experience.
Absolutely. And another question is, what are some of the developments that really get you excited about the sector? In past interviews, you've spoken about space manufacturing. Today, we talked about infra projects, red wire, data analytics. So there's even talks about mineral mining on the moon. So
Yeah.
what are some of the other developments that really get you like pumped about the sector?
Yeah. So certainly the space stations that are being built, right? There's a couple underway and a few more being drawn up. I think we need more destinations in space. So I'm excited about that. Some of the more exotic ones, you mentioned a couple, the moon, right? We have to lay a lot of railroad tracks, so to speak, between here and the moon, because there's not a lot of infrastructure. Once you get past geosynchronous orbit, the GPS constellation looks down, not up, right? So you need navigation systems, you need communication systems, you need power systems. And then on the moon, we need the ability to extract oxygen from moon soil. That's a really important technology. And then there are actually two mining theses that make sense on the moon. One is helium-3. We're actually running out of helium here on Earth. Go into any party shop and ask for balloons, and 3 days out of 4, they're going to be out of helium, believe it or not. So it's becoming increasingly scarce resource, and there's abundance of helium-3 on the moon. So I think that's a possibility. And then rare earth minerals, neodymium and others that go into things like your cell phone, your electric vehicle, but even things like weapon systems and guidance systems for defense related applications. And we are running low on those as well. And there's some dispute over who controls those resources, mainly between the US and China. So I think that's likely to be a use case as well, is mining for those resources on the moon. So those things are very interesting. And then, of course, Mars, right? I think going, as exotic as the moon sounds, it's really the same planetary system. It's only, in quotes, 240,000 miles away. Mars is, 200 million miles away or something like that. It's very, very, very far out there. So that's interesting. And I think if SpaceX is successful with their Starship vehicle, which I would never bet against them, then I think the likelihood we make it to Mars sometime in the 2030s is very high.
Okay, that's absolutely wonderful. I think you've touched upon some very eye-opening points like the scarcity of helium-3, potential of oxygen extraction in outer space, and of course the guidance-related application systems. I mean, one of the many use cases that are out there. Dan Ellis has a very pointed question for you. The question is, what's your top 3 stocks to buy?
Well, I probably need to tell you what I own first, right? So I own Astra, I own Planet, and I own, actually, those are the only 2 that I own amongst the ones that I mentioned earlier. And I'm still holding those companies. I ended up investing in those companies when they were private and they're now public. So I didn't buy them when they were public. I just got the shares issued. I think I'm going to answer the question slightly differently. I don't think it is a good idea to buy one or two stocks. My recommendation would be, and here's the analogy I would use. I don't think anyone would be old enough to fully appreciate this analogy, but I'll use it anyway. In the early days of the internet, e-commerce, right? Buying things on the internet, everyone knew that was going to be a thing. Anyone who was smart knew that was going to be a thing. What they didn't know is whether it was going to be Amazon or some other company that was going to win it. Amazon would not have been a good bet because at that time it was very well or lesser known. They were literally only selling books. And there were a lot of other really interesting companies that were selling software and other kind of more techie things. But had you bet on, a single e-commerce company, the likelihood you were successful was low. But had you bought e-commerce as a category, you would have totally crushed it, right? You would have got a 500x return. And I think space is a bit like that as well. I think making single entity bets is difficult. So I would take a portfolio approach. I would take, these 10 or so new space companies we've been talking about. I would do the diligence, find the 5 or 6 best that that resonate with you the most. And then I would spread your allocation around those 5 or 6 companies, because I think the likelihood you get a very, very high performing company is much, much higher. And yeah, you might have a couple of zeros in there, but it won't matter as long as you're holding, one lottery ticket, so to speak. So that would be my suggestion. I think being a stock picker in something this emerging is very difficult. But if you buy the sector, ironically, I think it's not risky. I know that sounds strange, but it's because you're sort of guaranteed to have a winner in there. So that would be my suggestion.
Perfect. So sage advice, don't buy 1 or 2 stocks, spread out your allocation. I think the e-commerce analogy really drives that point home. And I'm conscious of time. We have 2 minutes left. So Rahil has one final question, which is, are there any common misconceptions of commercial space investments?
Yeah, I think so. I mean, a lot of people don't fully appreciate how capital intensive these projects are. So they think, companies can stand up a satellite constellation company or a launch company. I think there are 168 launch companies in the world today. Only 3 have made orbit. I mean, there's only been 8 countries, I think, that have made orbit. So the likelihood of making orbit is so low. It's so difficult. I know SpaceX makes it look easy, right? They're launching weekly, they're relanding boosters. It's not easy. So I think there's a misconception on how difficult some of these things are, how capital intensive they are. And it's classic. If it sounds too good to be true, it is. And for people who are saying, yeah, we're going to build a satellite constellation, and they've raised, a handful of millions of dollars, they're not going to build a satellite constellation, right? So I would look for capital efficiency. That's why I like a lot of the so-called ones and zeros business plans, where they're taking space-based data and they're repackaging it, or they're mining it, or they're applying algorithms to it. I like space-based communication. We haven't talked about that, but that's getting the data back down. And one technology that's emergent there is laser communication. So, but yeah, I think just, be pragmatic, be smart. And, if someone says, yes, we're going to take on SpaceX and we're going to launch rockets, to the moon in 2 years, then, you should be skeptical, because there are people saying those kinds of things. So just be very, very pragmatic with your analysis of these companies.
That's a great point, to be wary and be cautious investors. On that note, thank you, Dylan, for speaking to the Finimize community. Your insights were exceedingly invaluable. To all the attendees, please remember to fill out the feedback form that will pop on your screens once this event is over, and tell us how much you love the event. Thanks a lot, Dylan.
Thank you. My pleasure. Thank you.